Dear students and working accountants, welcome to my Expert Tally Prime YouTube channel. My name is Babu Rao from Hyderabad. In this video, today we are going to discuss or we are going to learn about the rate inclusive of tax. That is the rate which are giving to the stock item rate in the sales invoices, the selling rate. The rate includes tax also. That is called as rate inclusive of tax. How to you may I mean how to raise the invoice with this one. Okay, with the tax, rate inclusive of tax. That's what we are going to learn. Before entering into the topic, I request you, many students they are entering the channel, watching the videos and going without subscribing to the channel. So my request is, please, everyone viewing my videos, please subscribe to the channel once only. So already subscribed, no problem. Otherwise, if you are not subscribed, please subscribe to the channel and you click the bell icon next to the subscribe button and select all so that you will get notification for all the videos which I upload in my channel. And also, you please share my channel with others also. And another very important thing is, everyone, please view every video, watch every video till the end. Don't skip in the middle. If you skip in the middle, you will learn this subject, you will know the subject or topic up to that point only, and the balance topic or subject you will not know. So it's of no use. It is like a half knowledge. So you will not get knowledge of the full topic, full knowledge of the topic. So please view till the end. So example, I will tell you. See, you are going to the college. We are attending the college of BA, BSc, BCom, or any other PG course or any course. We are attending the college. So to get the profession, to get the academic qualification. But here we are taking up Tally Prime software professional training. We are taking here professional training. So it is very useful to our career as well as to our life. That is why for this we have to spend time for that also. Okay, so every video will be around 40 to 50 minutes, or maximum it will be less than 1 hour. Please spend the time, watch every video till the end. So you to get the good and full knowledge of the topic. And after watching, if the video is good, so please like the video. If you would like the video, the YouTube people, they share this video with many people so that many people will have the chance to learn this topic. Now we will enter into you are entering into our topic here. What is meant by price inclusive of tax? What is meant by price inclusive of tax? That means when you are, see, I will tell you. So when there is one entry already, one company is created. This is the company created. See alter page. So this is the company created, and then we will go to the F11 features. Automatically it will go. Otherwise, we have to click. This is already created. We click F11. So all these required things. So maintain accounts, mill-wise entry, because there is inventory. So mill-wise entry is compulsory. Take the maintain entry, maintain inventory, integrate accounts with inventory, then GST, what you call GST, enable the GST details. Okay. And then that's all. Then accept the thing. Completed. Now, so I made one entry already, that is purchase of goods, because when you're going to sell the goods, we must have the goods to sell. So for purchase of goods, I made an entry. We purchased Dell laptop, HP computer, 5 pieces, and Dell mouse, HP keyboard, that is we taken 20 pieces. Dell mouse and HP keyboard, 20 pieces. We complete. Now, when you are selling the goods, we will make a sales entry. In the sales entry, how you will make the sales entry? See here, we will go to this one. Take the date is 2nd April. Okay, 2nd April, you are selling the goods. Go to sales voucher, and every case, in the case of sales voucher, it is having we have the stock items, that is inventory. So we have to use the item invoice mode. So here, there is sales voucher number 5. So already some vouchers are used. Now you take up, I have some debtors. We sell the goods to debtors. So Ramana Traders. We are selling. So accept. So Ramana Traders, the details of the party is from Telangana. So tax will be CGST, GST. Accept. Accept this. Then we are selling the goods. Go to the sales. Then you take it. See, for example, here, keyboard, mouse, or anything, a laptop or anything. See, for example, we are selling mouse. Mouse we are selling. So we are 1 minute, I'll tell you. So you are selling the mouse. Suppose you are selling 5 items. 5 items, each one. So here, sorry, each one. So we purchase for 700. For example, we are selling for 850. So 850. So this is the quantity, this is the rate, and this is the total amount. And then what you do, if there is another item, we will enter. Otherwise, CGST, GST. So we're paying total amount is 5,440. So each item 850. So 5,000, 5,440 divided by 5 items means it is 1,088. So 850 plus 18%, it is 1,000. Sorry, this is 28%, I think. 850 plus 28%, it is 238. Total 1,088 is the price, and that is the total price. Total price or total invoice value of each item into 5 items, totally 5,440. In this case, what are doing? We are giving the quantity and giving the exact, that is taxable value we are given. This is the taxable value, means we calculate tax in addition to this. On this amount, we calculate the tax. Okay, like this, where sometimes when they are selling, in the case of some shopping malls, provision stores, medical stores, all these things. So they will not collect this the taxable value and this the tax, and they will not correct tax separately. So they will give a price. So when you are selling, we will sell at one particular price. That is the total price. We sell that at that price. The customers will pay. But that includes, so no one can sell without any tax, just simply with one rate. Nobody can sell. So they have to sell with one rate, that is taxable value, and we have to calculate the tax in addition to that. So that is called, the rate is 850, tax is calculated separately. This is called the rate does not include tax. Is not including tax. The tax is charged separately. Suppose if the rate is including the tax, that means that is the final rate. That is the total price. This is the total price. This is for 5 units. 1 unit is 1,088. We calculated 1,088 is the into 5, 1,540, 5,440 by 5. So each item price is 8,088. That is including the tax. Total price. This is called invoice price or invoice value or total price. This is the invoice value or total price is, that is the total price. 1,088 means this amount includes tax also. So here, without showing this rate and charging the tax extra, we sell at a price which includes tax also. For example, we are selling this. For example, we are selling this. If the rate is 1,050 rupees, so that includes tax also. So we sell the goods for each item at 1,050 rupees. That is the rate, but that is not the taxable value. That is the total price. It is called, the tax is also included in that. So when you sell that at 1,050, the customer will pay 1,050 to us. So that's all. But when you are giving the invoice, we should not put that Dell mouse sold at 5 pieces, 1,000, 5 pieces, 1,050, and without any tax, charging tax extra. Without charging tax extra. So like this, so 1,050 rupees and 5,250. That is the total price. We should not take. This is the total price actually. So with this, without charging extra tax, we cannot sell like this. So in this, what you do? This includes tax also. That we should not show it as a. So here, when you give the price here, it is the taxable value only. But this is not taxable value really. It includes tax also. So what we have to do is, in that tax, inclusive price, that is tax inclusive, that is rate inclusive of tax, that rates includes tax also. So when we are selling that, so they will pay 1,050 only. But we are giving the invoice. In the invoice, we should not put 1050 rupees total price as the rate. So we have to divide the taxable value from this 1050, divide the taxable value and put the rate. That is taxable value we have to give at the rate, and then tax you have to put separately. Total amount taxable value plus total amount will be 1050. That is, it is including 1050 is the inclusive of tax. We have to divide it inclusive of tax. We have to divide the taxable value, put the taxable value, charge the tax separately. Total price is the invoice value. Total price will be equal to the price rate inclusive tax is there. So that is equal to this. That how to show that one. So in this case, here we should not show like this. In this case, what we have to do, we have to give the, if the tax, this value is the tax rate inclusive of tax. If you give the tax inclusive of tax, it will divide the inclusive of tax into taxable value and tax. So we can also calculate, for example, if the rate is 1050 is the 1050 is the rate inclusive of tax. That means taxable value 100 rupees, tax 28 rupees, for example, 1088 it is. 1088, for example, or 1100 rupees you take. 1100 rupees, that is the rate we are selling. So that is called as maximum retail price within brackets inclusive of all tax. So that is that rate, that 1100 rupees rate, maximum retail price. That includes tax also. When you are putting the invoice, we have to divide it into taxable value and separate tax. The total taxable invoice value should be equal to the rate tax. This rate it will be equal. So 1100 rupees means it includes tax also. For example, 100 rupees is the taxable value. 100 is the taxable value, and on that 28% is the tax. That means total price will be including tax 100 plus 28, 128. So in this 1100 rupees is equal to 128. 100 taxable value plus 28 tax. Total including tax will be 128. So this is equal to 128 divided by 128. If this is equal to 128, what is the taxable value? That is, what is the 100? So you take into 100. See, 859, 375. That is 37. 5 means 38. 859, 38. 859 point. This is the 38. This is the taxable value. So 1100 rupees is the inclusive tax rate, inclusive of tax. So it is divided 1518, 859, 38 paisa is the taxable value. If it is the taxable value, then calculate tax on this. So here that 28% calculate on this. So total amount will be 1100. So 00. So 64 means leave it off. If there are two decimals, if there is this actually 001, it will become. So this is 6. It becomes 00. 1100.01. It will become 01. This is the price. So this 1 paisa difference can be rounded up. So 1100 rupees. Like this, we have to divide the taxable value, that is the price rate inclusive of tax, including tax is given. In such a case, when you are giving the bill, in the bill you have to divide that into taxable value and tax, then you have to put that one. So you will say, if you go to some South India shopping mall, somewhere you will go, you will buy the rate. So the shirt pant will be 950 rupees. So we will bill that, we will pay the 950 rupees to them, we will take the pant or shirt, we will take the shirt. See the bill in that 950 rupees, they'll divide it, they will show the taxable value, and then below that CGST, HGST, they will put total amount will be 950. So that price inclusive of tax is divided into taxable value and tax. Total amount will be the invoice value. That is the price inclusive of tax equal to that. So in such case, what to do is here we have to put a separate column. Here we are giving the rate. So this is the rate means taxable value. So we are giving the pricing rate inclusive as taxable value. Then tax will be extra. So in this case, what to do? Here we have given a separate column. So price, that is the rate inclusive of tax, you have to give a separate column. If you give the rate inclusive of tax, 1100 rupees, for example, if you give that amount rate in the column rate inclusive of tax, then next one will be the normal rate. This rate is taxable value. So that rate inclusive of tax will be calculated the amount will be divided and the taxable value will be given in the rate column. And depending on the quantity, this is the total. And if you calculate the tax, the total amount will be equal to the price, that is rate inclusive of tax. So for that, what to do here? In this case, what to do is when you're putting the voucher, here go to the F12. If you go, so here tax details, you go to the tax details F2, F12, that is configuration. Go to the right side, tax details, provide rate inclusive of tax for stock items. So for stock items, give the inclusive of tax price rate. In this case, make it yes, accept. If you do this, so we are selling to him, and here accept, and this is the details, and here sales we are making. See here, quantity is there, total amount is there. The rate inclusive of tax, if you give the rate inclusive of tax, it will calculate depending on the rate of tax. This amount will be divided by 100 plus tax rate, 110, 18, 128, divided by 128 or 118 into 100. That will be the taxable value. Automatically will calculate. The same example we will take up. So here we are selling desk laptop. So two items we are selling. That's two numbers we are selling. So the price, 1,100 rupees is the rate inclusive of tax. 1,100 rupees we are selling. That means that includes taxable value and tax also. It is called as a rate inclusive of tax. So if this is the tax, 1,100 rupees, 1,100 rupees. So this is equal to, that is Dell laptop means it is not, no, don't take Dell, sorry, not Dell laptop. It is very higher. So we'll take up mouse, we'll take up mouse, two pieces. So if you take 1,100 rupees, or you can take up, okay, 1,100 rupees. If you take up 1,100, sorry. So here we give 1,100 rupees. So we calculate. So mouse is 28%. 1,100 rupees divided by, this is equal to taxable value. That is equal to inclusive price. Taxable value plus tax. So that means inclusive of tax. So in this principal, taxable value is 100. Tax is 28%. 100 plus 28. This is equal to 128. This is equal to 120 taxable value plus tax. 128. In that case, what is taxable value? 100. 128 is the price rate including tax. In that 100 is the taxable value, 28 is the tax. So the taxable rate including tax divided by the original value, that is taxable value plus tax rate, 100 plus 28 divided by 128. And if we divide that, and what is original taxable value is equal to 100. To take that, see, 859.38. The last one will be adjusted, that is set off, that is called rounded off to 1 paisa. 5 means 5 or more, next rupee. Next to this is paisa, so next paisa, 38. 859.37 paisa, 38 paisa is the same. 859.38 paisa. This is the rate, means this is the taxable rate. This is the rate inclusive of tax. In this, tax is also included. So if you give this one, automatically it will calculate like this. It will calculate like this. So if it is 18%, it will take, so 1,000 rupees divided by 118, it will take. If it is 28%, 120, 100 plus 28, that will be, this will be this one into 100. This will be the taxable value. So the taxable value is 859.38 is taken. Okay, one amount. Now we charge the tax. Tax you take SGST. If you take SGST, say total amount is, see, 1,100 rupees, one item including price. So into 2 means 2,200 rupees is the inclusive of tax, means in original in taxable value plus tax, total invoice value is called the tax including tax. So here you are giving, if you give that, automatically the taxable value will be calculated automatically, and the depending on the quantity, the total amount. And if you calculate the tax, the total taxable value, the invoice value will be equal to the tax, tax rate inclusive of tax. One item 1,100, two items means 2200. So the total amount is 2200. In this case, if there is any paisa difference, we can make it round off. So if you calculate round off, automatically it will round off. How you will calculate? So this is automatic. Otherwise, what we have to do is, here, it will come here. So it will come here. This round off, the cursor will come here and enter. And here, manually we have to go. Here, see, it is 2 rupees more here. That is why it reduced to make it automatic when you are creating the ledger. See, round off, it is indirect expense. Here you have to take, if it is taken not applicable, if you calculate, see, it is not rounding off. The paisa is there, 2 paisa. It will come here, again enter, and here 102 paisa is there. Less than up to 49 paisa, had to reduce to the lowest rupee. 50 and above, we have to increase to the next rupee. Okay, so here what you have to do is 2 paisa is there, it is to be reduced. So we have to give 2 paisa. Reduce means, don't forget, you have to give minus 0.02 and 0.02. So 0.02 if you give, then it will become round off. So when you are making this, we may forget to give minus. So then it will increase 2 paisa, it will become 4 paisa. 2 paisa will be added. So difference will be that decimal will be 4 paisa. Sometimes when you are giving, okay, give minus, we are giving minus. So 0.02 had to give. By mistake, 0.02 had to give. By mistake, if you give 2, it will reduce, 20 paisa will be reduced. Again, it will not be round off, isn't it? That is why when you are creating this ledger, how you will create is, here indirect expenses, here you have to take the type of ledger. It is used for, this round off is for invoice rounding. There are only 2. So discount is different and invoice rounding. So that you have to select. That is, we are using this round off to invoice rounding. That means it will become automatic. It will automatically calculate the rounding method. We have to take general, we have to take normal rounding. 50 or more, add to the next rupee. Up to 49, less than 50, up to 49, reduce to the lowest rupee. That is the normal rounding, and the limit is 1 rupee. So next higher rupee or lower rupee. So take 5 rupees here. Next to 5 rupees, below 5 rupees. So 1 rupee will take up and accept. If you do this, automatically it will. So there will be no error. So like this. So this is how we will make. And we will take another example. So again, we are selling to another person. Another person we are selling. Here we are selling sales. Here we are selling. See here. Keyboard we are selling. Keyboard, 5 items we are selling. So the keyboard rate will be keyboard 750 rupees, for example. So what is the amount price? Right, sorry. What is the selling purchase price? 250 you purchased the keyboard, 250. 250 you purchased, 350 or 400 we are selling. That is 400 means inclusive of tax 400 or 450. 400 will take up. 400 rupees inclusive of tax. That is retail price including tax. We are selling for 400. So here also 28% means 400 divided by original value, that is taxable value is 100 rupees. Tax is 28. It is equal to, this 400 is including tax, means equal to original value plus, that is taxable value plus tax, 100 plus 28. Then original value 3.2 into 100 original value. We take 312 rupees 50 paisa is the taxable value. So if you give this 400, see here, 312 rupees, automatically it will calculate. We need that. Otherwise, we have to calculate every time. So if you give like this, inclusive of tax, if you make in F12, in F12, if you make, this is not there, not here, there, provide rate inclusive of tax. Yes, if you give that, then automatically it will calculate 512 rupees, then come down CGST, HGST. CGST, HGST. Total amount is 2000. One is 400 rupees, including tax, and five items, 5 pieces, 400 into 5, 2000 rupees equal to this is the price, that is the price, original value, that is taxable value plus tax. This is the amount, including tax is 2000. This is the rate inclusive for each item. 400 means 400 into 5, 2000 rupees is the total price. So the total price. So it is divided into taxable value, that is the total price, including tax. This is without tax. What is the taxable value? It is dividing, and then on the taxable value, we are calculating tax, showing we have to show separately. That is because this is to be paid to the government. If you totally, if you do for 400 rupees, how much to pay to the government? What is the tax? That is, we have to divide it into taxable value and then calculate the tax. Total invoice value means including tax. The total invoice value is equal to rate inclusive of tax. 400 means it is total 5 items. 400 to 5, 2000, 2000. Here there is no round, there is no fraction value, there is no decimal value, there is no paise. So we need not give the round off. If you give round off, it will not calculate. If you take round off, it is already round off, so it will not calculate any amount. If you take it, okay, that will go, that will disappear without any amount, without value will disappear. In the previous example, the previous videos we learned buy one get one free. So zero value transactions. Here there is no value, so this will disappear. If you accept, bill number 2000, 2000, 2000. If you go page up, the same invoice will come. See, round off, it is disappearing. It is disappearing because there is no value. So like this, we calculate. This is called the price rate or rate inclusive of tax. In such a case, we have to calculate separate. We have to separate in that value the taxable value and the tax we have to separate. Generally, in the case of any shopping malls, provision stores, medicines, and all these ways, they will say 500 rupees plus tax. They will not say. So what is the rate? 500 rupees. It means that amount includes tax also. We pay 500 rupees and we will buy that. So that includes tax also. When you give the invoice, when we are selling, when you give the invoice, we have to show the taxable value separately, tax separately. So from the rate including tax we are charging. So that is to be divided into two parts. One is tax, that is rate taxable value. The rate at the taxable value at you and show separate tax. Total amount will be equal to the rate inclusive of tax. So 400 into 5, 2000. Okay. So like this, we have to calculate. Okay. So here, this is about the rate inclusive of tax. Okay. When you give the, suppose, otherwise, 1 minute. If you don't give this, if you don't give rate, you give 400 rupees, that means it is the taxable value, then calculate the tax. So extra tax will be there. So it will be more than 500 rupees. That 400 including tax, that is why we have to put a separate column, rate inclusive of tax. If we give that rate inclusive of tax, automatically that taxable value will be calculated. And then if you calculate tax, both will be same. This is cut. If you give the total amount here, if you give 400 rupees here, so this column is the taxable value. So it will take it as taxable value. And then if you see here, if you don't give this, if you don't give this, if you give 400 rupees here, it will calculate. Then that this is including tax, it will become 512. So if you take this, the 2000, 2560. So 2560 divided by 5 numbers, 512 rupees is the inclusive of tax. That is, if you give this, this is taken as taxable value. If it is including tax, we have to give here 400. The taxable value will be calculated and the total amount will be equal to this one. Total amount will be equal to the rate inclusive of tax. This includes tax. This also includes tax. This is how you will calculate the rate. So how to set up that rate inclusive of tax? If you are selling with the retail price, that is maximum retail price you are selling. So that includes tax also. In that case, we have to enter the transactions like this. Give the rate inclusive of tax. If you give, it will automatically calculate the taxable value depending on the rate of tax. It will divide the taxable value, and if you give the tax, then total amount will be equal to the what we are selling, the rate inclusive of tax. The total bill amount will be equal to the rate inclusive of tax. This is how we will calculate. So with this, I close this one. So in the next video, we will take up some other important. These are all technical points. They're all some technical videos. So next we will take up in some other important video. Close that. Wish you all the best. Bye.